What's going on, everyone? My name is Johnny and welcome to Stock Rank, and today we're going to go over the 10 steps to finding the best stock. Now, before we go ahead and get started, I just want to let everyone know I am not a financial advisor, as many of the other stock YouTubers say, but I do believe after doing a lot of research that this can bring a level of confidence when we go ahead and choose stocks when it comes to our own portfolios. So let's go ahead and get started. Okay, so before we go ahead and already look into a stock, we need to ask ourselves, what is the one thing that we want to look for in a stock? Now, there's three kinds of stocks that I feel like many of you are aware of, but I just want to give a little insight before we go ahead and move on to the next steps. And so there are growth stocks, value stocks, and dividend stocks. Now, growth stocks are those that are really growing fast. I mean, it says it basically in the name. But this is when the company is at its prime time when it comes to growth. Now, I do want to be transparent with you guys. Growth stocks are actually the one thing that I tend to lean more towards. I do have a couple value positions, but for the most part, I tend to lean more towards growth. So there is more risk when it comes to growth stocks. However, personally, I like the ability to have a little bit more risk. Okay, so the second one is the value stock. And the value stock is when it's in the middle stages of growth. It's basically already gone through a lot of its exponential growth, but now it's just moving up pretty steadily. So there tends to be less risk in comparison to a growth stock, but the main focus when you're looking at a value stock is in terms of profitability. And we'll talk more about value stocks in another video, but I think for this video, we should look more into what it means to have a growth stock. And so before I go ahead and move on to the growth stock, I just want to real quick go over the dividend stock. And honestly, a lot of people are actually moving away from dividend stocks because when you buy the stock and you get paid the interest for these stocks, in other words, they give you money for owning the stock, you actually end up having to pay taxes on those when you get those gains. So it's not even like after you sell the stock, then you have to pay for it. No, when you get that interest from the stock, you actually end up having to pay taxes on the interest that you gain. And so that's why people are tending to move a little bit away from dividend stocks and more into growth and value stocks. But I do want to make that aware to you guys before we go ahead and move forward. So in this video, we're going to be talking about growth stocks. And the thing that you need to know about growth stocks is that you want to look for companies that are into what is going to be expanding moving forward. What are the products and what are the ideas that are going to shape the next decade to come? And so it's really important that when you're looking for a specific company, that you want to look for what is going to be the next product or the next idea that is going to spring forward in the next decade. Okay, so step number 2 is to look at the products that the company offers. And some ways that you can do this is by looking at the articles that people write about them. You can look at the reviews. That's a personal favorite of mine because you can really look into what people think about the products in terms of how the company makes them. Are they cheap, or is there a really good idea behind it? And this goes for things that are physical, but also things that are not physical, like software, for example. And so this is really important for us because we need to be able to trust the company in terms of how they make their products. And if we look at reviews, that actually brings us more confidence because other people have confidence in the product as well. And so the other thing to be looking for in products in particular is what actually separates them from other products. I think sometimes we try to invest a company because we know about it or we know what the product brings, but if it's not better than another product, then it's difficult to actually trust that that product is actually going to expand the business and expand the company in general. So it's really important to actually look at what other companies offer similar products, and do we believe that that product is actually better than the product of the other company. So as I said before, we're actually going to be focusing on growth stocks. And so step number 3 is this: what is the company's revenue growth? And there's two ways of looking at this, and I actually want us to focus on both of these. The first way is, what is the calculated revenue growth? And what I mean by that is, what is the revenue that has already been processed through within the last few years? A good way to look at this, and this goes for me personally, this is how I review the stocks that I want to look at. I try to see, does the company produce 75% year over year revenue growth. So between 2019 and 2020, was there 75% revenue growth? And if so, then I'll continue to move on to the next step. But if not, then I might do a little bit more research, but I'm already starting to be a little bit cautious about that. And so the second part of it is the expected revenue growth. Now this is definitely different than the calculated, because this focus on the projections. And so I want to make this clear that we cannot always trust the projections that companies give us, but it allows us to get an idea as to what their goals are moving forward. And so when it comes to expected revenue growth, I personally want to see the company produce at least 50% year over year for probably the next 3 years or so. That way it'll help me come up with personal revenue projections as to what the company can do based off of the goals that they've set for their own company. And so for the most part, ways that you can view both of these numbers is actually through this thing called their investor presentation. And so some of you guys probably have heard what an investor presentation is, but an investor presentation is basically a summary or an overview as to what the company offers, the certain products that they have, but also the financials when it comes to their company. So I think that the investor presentation is actually one of the first things after you started reviewing the company itself. The investor presentation should be the next thing that you really focus on. Okay, so after we've approved the calculated and expected revenue growth, we want to look at the next step. And the next step is talking about the industry itself and what their growth is. So a specific number or a specific term that you can look for is called the CAGR, or the compound annual growth rate. And this actually demonstrates what the industry as a whole is growing at. So when you look at EVs or electric vehicles, for example, they will have their own compound annual growth rate. And so when it comes to industries as a whole, I want to be able to look for companies that have at least 8%. Now, of course, the higher the better. Personally, I really like around 12%, but 8% is still a really good number to look for when it comes down to the compound annual growth rate. Okay, so after we look at industry growth, now it's time to move on to step number 5. And step number 5 is, does the company have minimal to low debt? So the thing with minimal to low debt, honestly, it just brings you so much more confidence, because the fact that you have no debt, if a company has no debt, that actually decreases the risk of the company, which then brings you confidence when you invest in the stock. And so I really think that this is something that is underrated and undervalued, especially with a lot of investors who are focused on penny stocks, or ones that just, they see the idea and they think that it's going to grow like crazy. A lot of them honestly don't look at the debt, and the debt is so immense, it's so big that it's like, how is the company going to be able to pay off all this debt when they're not even going to be making revenue for the next 1 or 2 years? So I think that honestly, the minimal to low debt is super important when it comes to finding a stock. Okay, now we're going to move on to step number 6, and we're actually going to go back to the revenues, because after we see that the debt is low, that actually gives us confidence to be able to really dive deep into what the company is going to produce in terms of revenue numbers. And so we're actually going to go to the projected revenue. And one thing that we can do is to see what is the projected revenue over the next 5 years. A lot of investor presentations actually give you these kinds of numbers, and so if you don't see those, you might need to make up these numbers for yourself. One thing that I do want to say on whether or not to trust the investor presentation numbers, honestly, you need to be able to map things out and be able to say, is this actually possible? Now, of course, you have those companies that just produce like crazy, and all of a sudden they do end up getting those numbers. But you want to be able to have confidence for yourself whether the company is going to produce the numbers or not. And so personally, I suggest making your own numbers if you feel comfortable enough in doing that, just because that actually allows you to feel confident knowing that the numbers that you mapped out make sense to you, as well as honestly, for me personally, I tend to be more conservative on my numbers anyway. So then if it really does work out and the numbers actually go with what analysts are saying or what the investor presentation says, that's way better than what I usually project. And so that's more of a personal thing. If you want to trust the investor presentations, that is up to you. But for me personally, I tend to have more confidence when I write the numbers myself. And so there was actually a time as I was going through my research where I came across a stock that honestly I did not trust the numbers at all. And it was actually a company called Arrival. Now, the thing about Arrival is producing all these different kinds of electric vehicles, and honestly the vehicles themselves look really sweet. But the numbers that they came up with, honestly, I just wasn't able to see it because they projected to be able to produce $14 billion in revenue by 2024 when they haven't even created the vehicle yet. And so that was just really difficult for me to be able to trust the investor presentation and to trust that company. But if anyone is watching it that is from that company, I do hope the best for you guys. I hope that you guys do or are able to produce those numbers. But for me personally, it's just really difficult to be able to see those projections. So that's why personally, I like being able to write my own numbers. Just to give me more confidence in the things that I'm investing in rather than needing to rely on someone else's research. So before we move on to the next 4 steps, I just wanted to share as to why I specifically chose these 6 steps in the order that I did. I mean, the first thing is you want to be able to get the faster research done first. If there are certain things that you don't like about the company, you want to spend the least amount of time possible on that stock. We don't want to get into the next steps that could take hours and hours and hours and then go to the financials and be like, that doesn't make sense. So that's why I personally like doing the 6 steps first. And I know that some of the other investors on YouTube use some of the other steps that we're about to talk about. They use those steps first, or at least more in the front end. But honestly, for me personally, I don't want to spend hours of research on a stock that when I look at the financials afterward, it just doesn't make sense to me. Okay, step number 7 is this. Is the management team experienced? This is so important because a lot of times someone comes up with this idea and they want to be the starter of a company and everyone wants to jump in on this, but they've had no experience in terms of handling employees or being able to control and be the visionary of a company. It is so important for you to have confidence in who you are trusting with your money. And so that's why personally I spend a lot of time looking at what do they post on Twitter, what is their LinkedIn like, what are their interviews like. I recently just looked at an interview, and honestly I liked the company overall. I thought the financials were good, but then when it came to the interview, I just didn't trust the guy. There was just a characteristic about him that personally I just didn't like. And I really enjoy those people that have a lot more energy, that are excited about their products. And this company in particular just didn't have that. And so that's why I think it's really important to spend quality time looking at the management team so that you feel confident in putting money towards their company. So when it comes to having a management team that's experienced, there's 3 questions that I ask myself that allows me to have more confidence within this company. And the first question is this: who is truly vital in this organization? Now, of course, a lot of people would say, oh, it's the CEO, the CFO, and the COO, which could be true, but who do you hear more about? Who is truly the go-to and the one that handles a lot when it comes to a company? For me personally, I have a company called Tattooed Chef, and I know that some of you guys have probably heard of this stock. And the thing about Tattooed Chef is they just got rid of their CFO, or their chief financial officer, and there was a huge sell-off, and it was as if everything was going crazy and the stock was plummeting. And I was thinking about it, and I remember watching Financial Education with Jeremy, and he's like, did anything change about the company? Like the person that ended up filling in the CFO position was already a part of Tattooed Chef, the one that already knew the company. And so there was no reason to get so flustered about what the company is going to be looking like moving forward. That's why it is so important to be able to ask the question, who is truly vital in this organization? If that person were to leave, would it negatively impact the organization? And the second thing, honestly, is this, is the team buying their own stock? This goes to show if they even have confidence in their own company. And I think one of the big things in particular is that if you can see that an owner or the CFO or the COO is buying their own company, especially at higher prices, man, they have big projections. And honestly, it allows you to trust their numbers as well, because of the fact that if they don't even trust their own numbers on investor presentation, then they certainly would not be buying their stock, especially at the prices that they were. So that's why it's really important to notice, is the management team actually buying their own stock? And so the last question when it comes to the management team is this: how are they growing and innovating? One of the big things for management team that I personally like is, who are they acquiring? What are their big acquisitions? How are they coming up with the money to get those acquisitions? What are some of the new products that they could be talking about that could be brought up in an interview? That's why interviews are so important, because it actually allows you to project more numbers or more revenue into the company moving forward. And honestly, since earning calls or conference calls, which we'll talk about later, since those only happen once a quarter, the interviews could possibly happen once a month. So you actually get to dive deeper into what the company is doing now, rather than what the company was doing 3 months ago. Okay, step number 8 is this: check news articles over the last couple months. Now, this is really important because you want to be able to see if there are any lawsuits that are going on, if there's any new partnerships that could be coming up, or even certain things that other investors are doing. I know that there are a lot of people who write articles that are negative about companies, who are actually short selling the company. They just do not believe in the company whatsoever, and so they want to be able to bring down the stock by writing articles about them. So you want to be able to see those things too. This shouldn't be discouraging or anything like that, but it actually could help you build more confidence if you're able to fight off the points that are being made in these short selling articles. Another thing to be looking for is, are there any recalls or any kind of product failures? Knowing those things when you're looking through your news articles actually will help you down the road, so that you recognize the risks that come from investing in this stock. All right, step number 9 is this: listen to the conference calls. And I know that conference calls can take forever, from 30 minutes to an hour and a half, but it's really important to listen to these conference calls, because they can end up answering questions that you may not have thought of yet. Whether that is actually going through the presentation itself, or even during the Q&A sections. There's analysts and other investors that could have questions that you may not have thought of. And so when it comes to listening to the conference calls, one of the big things that you need to listen to is whether or not the company is meeting or beating expectations from other analysts. If the company is not beating expectations, then it's really difficult to be able to trust whether or not they're going to beat expectations moving forward. And more so, this applies with revenue, especially when we're talking about growth stocks. EPS, or earnings per share, is a little bit different with growth stocks, because they're still trying to grow as a company. But especially with revenue, it's really important to recognize whether or not they are meeting, beating, or even failing to meet the expectations of other analysts. And the last thing to see in the conference calls are, do you have any concerns from what the CEO or the CFO or anyone from the company was saying? Also, were there any concerns that you heard from the answers that they were giving to some of the questions that other investors had? Knowing those things will actually help you identify if this is a company that you want to invest in. but also if the company responds well, if they have exciting news that's coming in these conference calls, then that actually might boost your confidence for that stock. Well, that's it. No, I'm just kidding. We actually got step 10, and step 10 is this: read through the 10Ks and the 10Qs. Now, I know that these things will take a while to read through, but it's really important because you're able to see what are the risk factors, what are some of the goals that the company has moving forward, and also what is their backlog. In other words, what are the products that are already being sold that they just need to be able to produce and give to the customer. Knowing those things will actually overall produce you with the confidence necessary to be able to invest in the stock. If there are any concerns within the 10K or the 10Q that you see, that's basically your last straw. That's the end all be all. So it's really important for you to read through the 10K, make sure that you see the risks that come with investing in the stock, and be able to support your reasoning as to why this stock is worth putting your money into. All right, now that's it. The 10 steps that you need to look at when it comes to investing in a stock. Now, I know that, and I want to admit once again that I am not a financial advisor. However, knowing these 10 steps actually has helped me immensely when it comes to investing in a stock, because not only do I get it done a lot faster, but I actually have more confidence because it helps me build a checklist in terms of asking the right questions about a stock. Does the company know what they're doing? Do I have enough confidence in the management team? All those things will be checked off when I go through these 10 steps. So I hope that this helps you. If you want to be a part of what we're doing here in terms of helping each other grow in our investment portfolios, you can go ahead and hit the like button or subscribe to this channel. We're actually going to be going deeper in terms of looking at individual stocks. Actually, the main idea of this channel, it's called Stock Rank, and Stock Rank is basically putting stocks up against each other so that we have confidence between, do we want this stock or this stock? What are some benefits about one stock over another? And the way that we're going to be looking at these stocks is actually through their market cap, to see the risk that is involved with the stocks as they grow in market cap or as they shrink in market cap. So I hope you enjoy this video and hope to see you on the next one.